Sameer, it's congrats on the business.
Thank you.
It just sounds awesome what you guys have built. Um, a bunch of things like resonated with me, like on this idea of like throwing the code away and being comfortable with that, and chucking a lot of stuff at the wall. I think it's something a lot of founders don't aren't able to do. So that's a huge thing. The thing I wanted to ask about, because I'm really curious about the details, because I've been there myself a few times, is that 2017 period. How did you guys get to profitability or cash flow positive or whatever the numbers you're looking at? Like, you sat there, you weren't able to raise the A, you had to figure out a plan B. It's easy to say, okay, plan B, let's get profitable, let's be able to sustain ourselves. What was it like? What was there a key like insight there, or what were you able to achieve? And then a follow up to that is, why did you decide then to go and raise the A to pour fuel on? Like, what happened in that period? I'm really curious about the details there.
Yeah, for sure. Well, yeah, first off, I'm glad that throwing away code resonates with you. I was never like the best engineer, so I love writing throwaway code. It's my favorite thing. So, uh, yeah, super
We had a
interesting
metric which
period.
was most lines of code deleted was like a something
Nice.
we really praised.
I
So
love it. Love it.
go ahead.
Yeah, a really interesting period for the company, and yeah, I think probably the most stressful period, in the history of Cambly for me personally, and I think my co-founder as well. But also like very, very productive in a very short period of time. And you'd always hear about like, the benefits of not being flush with cash, and like, how being scrappy and not having a ton of capital like has all these benefits. I was always skeptical of that, honestly. When I heard it, I was like, why can't you just pretend like you have less money and then make all those same great decisions? But I learned that year that like it is different when there's a gun to your head and you're like, I think it was the only period in our history of the company where there was like an existential risk. Like, if we don't make the right set of decisions now, like the company may not exist in the future. And I think like it's really interesting, I think, to reflect on that, even that statement. Like, the um Cambly is scaled a lot since that period. And the company is like, I think, in lots of objective ways, like been pretty successful. Uh but like we almost like died in that period, right? Like, I think it speaks to sort of the fragility of startups, like,
Hmm.
even ones that like are building the right thing for the right market at the right time. Like, they're just like, they're fragile in these early days, so you just have to be really like smart about the decisions you make. And yeah, I like being really lean and kind of making stretching every dollar to as far as you can go. But yeah, so that period was stressful but highly productive. Well, yeah, what are the decisions we made? So, I touched on one of them in terms of like pricing. So we really did like two things, and we did it quickly, and we did it decisively. Uh, we raised our prices across the board, and I described this as something where like I think we might have made that decision anyway, but I
Hmm.
think we would have debated about it. We'd have stretched it out. We'd have like said, okay, like how about we roll out these price changes over the next 6 months or whatever. Like we would have found like we would have done it at a reasonable pace. uh, and when you're in an existential risk, you don't do that. You're just like, we're going to change all our prices today. This is not a question. We're doing it basically.
Hmm.
And so you just end up making some of those decisions quickly. And so we raise our prices. The other thing we did, and I mentioned cash flow positive, is like we sell long-term plans, and there's obviously like some pretty good cash flow implications there. Like, if someone signs up for a year-long plan and they pay you upfront for that, you get a lot of cash upfront. And so we hadn't messed with prices that much, and our margin had kind of been shrinking as we like gave away bigger discounts and so forth. And so the price raise, just like our margin just like popped overnight, basically. Um, and literally, actually, like I remember our gross profit graph that I was studying very, very closely at the time. Like, I think it doubled in 2 months with this price change. Like, it just doubled, and that's kind of the unit economics of the business, right? And so yeah, we raised prices, and then we were experimenting with long term plans, but we hadn't like deployed them to like our whole customer base, and so we basically shipped it to everyone. We were doing it kind of as one off promotions, but we were like, no, we're going to give this to everyone, and that combo basically gave us a much higher margin and gave us kind of more cash flow. And so those two things made a really big difference to kind of dig us out of the hole we'd kind of gotten ourselves into a bit. And then I think we suddenly had like more capital because like the business was just better. And so a lot of the growth that we had sort of in the months that followed was just like we went from like a company that was very, very squeezed for capital and like couldn't even spend much to make good investments in growth to like all of a sudden a company that was like actually generating cash. And so although we didn't succeed at raising, we did succeed at effectively raising from our customers. And then we were able to start to invest some of that cash. And we were really smart about it because it wasn't as much money as we would have went out to raise in a Series A. But I think having a little extra capital to invest and I think it was really compelling for investors because again, we didn't raise the money. We did the things we said we were going to do, and we did it on the help of the business. And so it's just like really, I think really, really compelling. And so your last part of your question, why did we go and raise? Even though we were cash flow positive, like we had between like, you know, $1 and $2 million in the bank, like we were paying close attention. And it's hard to run a business like that, to be honest. Like, you know, my co-founder and I, for the toughest part of that period, like we would literally write down what is on all of our bank balances, add them all up weekly and be like, okay, how are we doing? Like you end up spending a lot of energy like doing this stuff that like if you just had a buffer, you just like don't have to think about. Like you want to think about it a bit, but you don't need to like study it. Like we were just using a lot of our like mental capacity and brain power towards this. So I think getting a little bit of a buffer just like takes a lot of that pressure off. But I think the bigger thing is you want to be able to invest, right? Like if things are going well, you want to be able to invest. And like, you know, we've been cash flow positive since that period. So we never touched the money in the Series A. We never touched the money in the Series B, which is crazy. But I think people are often asking me like, oh, well, if you didn't touch the money in the Series A and Series B, like, why did you raise it? And what I didn't say is like, we did not operate the company in the same way that we would have had we not raised that money. Like when we raised a $15 million Series A and a $40 million Series B, all of a sudden now we have like a huge cushion that lets us actually make long-term bets. And I think the biggest long-term bet you can make is you like hire amazing people onto your team. I think particularly on product, which engineers are expensive, and they're a long-term investment, right? Like they make the product better, which creates a lot of long-term value for the company. But it takes time to pay off. And like, you know, post Series A, we immediately started hiring. We grew the team a lot. And I think same thing post Series B, like we've just been able to move much faster, move the product much faster forward and make a lot of smart investments that we now are comfortable enough to make.